Good day. I welcome you to the our consult classroom once again. So today's session will be on Islamic accounting, precisely Murabaha finance. Okay, so Murabaha, that's when goods are sold at cost plus markup. Cost plus markups. And then from our basic financial mathematics knowledge, you know that cost plus markup will give you the selling price. This will give you the selling price. Okay, so the principle Gabu Murabaha financing is whenever a party is in need of property or an item, and then the person doesn't have enough money to buy the item, the person will go to the bank and then explain its intention of buying the property to the bank. And then the bank will go to the market and then buy the item and then come and sell it to the party. So for example, let's assume that party A is in need of car to do Uber business, but party A doesn't have money to buy the car. So party A will go to a specific bank and then explain its intention of buying a car to the bank, and then the bank will go to the market and then buy the car and come and sell it to party A. But before the bank will do so, party A could be required to make initial deposits. And then the amount of initial deposits that party A will be made is not refundable. The reason being is the bank wants to be insured or protect their interest. So in case party A was not made to make any initial deposit, maybe party A will not come again for the item, and then which means that the bank will incur losses unless they sell the item to another party. And then possibility for the bank to sell the item to another party at reduced prices. So because of this, party A will be make or required to make initial deposits. So the difference between the cost of the item and then the initial deposits is termed as cost of finance. So cost of finance is the difference between the cost of the item or the property and then the initial deposits made by the party. So let's assume that the cost of the car is 5,000 Ghana cedis. The cost of the car is 5,000 Ghana cedis. And then party A made initial deposits of 1,000. So mean the difference between 5,000 and 1,000, which is 4,000. That will be the cost of finance. So every year, party A will be required to pay interest on the cost of finance, but not the cost of the item. Because for the cost of the item, party A make initial deposits or use his own personal money to pay part of the cost of the item. So if we make party A to pay interest on the cost of the item, means that party A is paying interest on its own money. So always the interest to be calculated as the markup will always be calculated on the cost of the finance but not the cost of the item. And then normally the party will be given a number of years to repay the cost of the finance, financing together with the interest. And always the party or the person who was in need of money will be given number of years to repay the cost of the finance together with the markup or the interest. So let's assume that party A was given 10 years. 10 years to repay the cost of finance. And then the annual markup is 10%. So what it means is every year the party A will pay 10% interest on the 4,000, that's the cost of finance. So annual interest. Annual interest or markup will be 10% times the cost of finance, which is 4,000. So 10% on 4,000 will give us 400. 400. So if you want to calculate for total amount of markup that party will be paying over the 10 years, we just multiply the annual markup by the number of years. So in this scenario, total markup over the 10 years will be 400 times 10. That's the number of years, and that will give you 4,000. So it means that at the end of the 10 years, party A will be paying total markup of or interest of 4,000 to the bank. And also the cost of financing, which is 4,000. Since party A was given a 10 years to repay the 4,000, it means that every year you will pay part of the 4,000. So if you want to calculate for annual cost of financing that party A will be paying, you just divide the cost of financing by the number of years. So in this scenario, that will be 4,000 divided by 10, and then that will give you 400. So it means that every year, party A will be paying 400 as cost of financing, or repayments of the cost of financing will be 400. So if you want to calculate for annual installment payments that party A will be making, that will be the annual cost of financing plus the annual markup. So in this scenario, the annual interest of markup is 400, and then the cost of financing that the party A will be paying every year to is 400. So annual installments will be 400 plus 400, and then that will give those 800. So if you want to calculate for the total amount or total payments that party A will be paying over the 10 years, that will be the total markup over the 10 years plus the cost of financing. And then that will be, so you know that the total markup is 4,000. And then the cost of financing is also 4,000. So 4,000 plus 4,000, that will give you 8,000. Or another way of calculating for this, we know that every year party A will be paying annual installments of 400 for 10 years. So if we want to calculate for the total amount that party A will be paying over the 10 years, you can multiply the annual installments by the number of years. That's 800 times 10. And this will give you 8,000 as well. Okay, so that's how, or the procedure that you can use or you'll be using to calculate for the annual installments that the party is responsible to pay, the total amount of markup that's supposed to pay, and then annual cost of financing that the party is supposed to pay. So we proceed by solving a practical question. The party or the person who was in need of money will be given number of years to repay the cost of the finance together with the markup or the interest. So let's assume that party A was given 10 years. 10 years to repay the cost of finance, and then the annual markup is 10%. So what it means is every year the party A will pay 10% interest on the 4,000, that's the cost of finance. So annual interest or markup will be 10% times the cost of finance, which is 4,000. So 10% on 4,000 will give us 400 or 400. So if you want to calculate for total amount of markup that party A will be paying over the 10 years, you just multiply the annual markup by the number of years. So in this scenario, total markup over the 10 years will be 400 times 10. That's the number of years, and that will give you 4,000. So it means that at the end of the 10 years, party A will be paying total markup of or interest of 4,000 to the bank. And also the cost of financing, which is 4,000. Since party A was given a 10 years to repay the 4,000, it means that every year you pay part of the 4,000. So if you want to calculate for annual cost of financing, that party A will be paying. We just divide the cost of financing by the number of years. So in this scenario, that will be 4,000 divided by 10, and then that will give 400. So it means that every year, party A will be paying 400 as cost of financing, or repayment of the cost of financing will be 400. So if you want to calculate for annual installment payments, that party A will be, again, that will be the annual cost of financing plus the annual markup. So in this scenario, the annual interest of markup is 400, and then the cost of financing that the party A will be paying every year to is 400. So annual installments will be 400 plus 400, and then that will give 800. So if you want to calculate for the total amount or total payments that party A will be paying over the 10 years, that will be the total markup over the 10 years plus the cost of finance, and then that will be, so we know that the total markup is 4,000, and then the cost of financing is also 4,000. So 4,000 plus 4,000, that will give you 8,000. Or another way of calculating for this, we know that every year party A will be paying annual installments of 400 for 10 years. So if we want to calculate for the total amount that party A will be paying over the 10 years, you can multiply the annual installment by the number of years. That's 800 times 10. And then this will give you 8,000 as well. Okay, so that's how, or the procedure that you can use or you'll be using to calculate for the annual installments that the party is responsible to pay, the total amount of markup that is supposed to pay, and then annual cost of financing that the party is supposed to pay. So, okay, so we are coming to solve practical question on Murabaha. And I read the question. No. The Ghana Islamic Bank sold on a Murabaha basis a house to Imam Ghazali at a markup of 8% per annum. Constant rates of return to be paid over 10 years in equal annual installments. The cost of the house was 500,000, and Imam Ghazali paid 100,000 deposits. Ghana Islamic Bank follows Islamic Accounting Standards and recognizes profits according to the installment deal. Imam Ghazali paid the installment for the first 2 years, but was late in paying the third installment by 1 month, which he paid at the end of the fourth year. Together with Ghana Islamic Bank follows Islamic Accounting Standards and recognizes profits according to installment deal. Imam Ghazali paid the installments for the second year, but was late in paying the third installment by 1 month, which he paid together with Tawid. The bank charged him a Tawid, that's the interest for not paying the installments on time, which will be payable to charity. At the end of the fourth year, then His Eminence, the National Chief Imam, Sheikh Osmani Nuh Salutu, gifted Imam Ghazali a bounty for his magnum opus Iyara of 600,000. The Imam Ghazali decided to redeem his house financing, and then keep a balance of 100,000 for his expenses, and then give the balance as Sadaqah to achieve the pleasure of Allah. Ghana Islamic Bank gave him a full rebate, that's discount, on the last date. Gave him a full rebate on the on-hand profits for the remaining period of the original Murabaha contract, which was redeemed on the last date of the fourth year. The Imam Ghazali was able to give the intended amount of Sadaqah in Ramadan as the moon was sighted on the last day of the 4th year of the Murabaha contract. You are replied, I, using accounting and auditing organization for Islamic financial institution accounting recognition method. How much charity would Imam Ghazali be able to give? Using the International Financial Reporting Standard accounting recognition method. How much charity would Imam Ghazali be able to give? And then the last requirement is explain the difference in results of International Financial Reporting Standard and accounting and auditing organization for Islamic financial institution method. So first, let us bring out the key information in this question. So from the question, you know that the cost of the house is 500,000, and then the Imam Ghazali make initial deposit of 100,000. So initial interest deposits, that's 100,000. And then Imam Ghazali was given 10 years to repay everything. So number of years is 10 years. And then the markup or the interest, or annual, or the markup or the annual interest was given as 8%. So annual interest rate was given as 8%. And then from the question, Imam Ghazali was able to pay the first 2 installments, but the third installment was late. So he didn't pay the third installment on time. So the bank charged him interest of 100 Ghana. So interest on late payments, 100 Ghana cedis. So he paid this together with the 4th installment. So he paid the 4th installment as well. So in conclusion, Imam Ghazali paid first to the 4th installment. So after that, Sheikh, the chief Imam, gave or gifted Imam Ghazali an amount of 600,000. So gifted amount. Gifted amount is 600,000. And then out of this 600,000, Imam Ghazali was intended to use 100,000 for his personal expenses. So personal expenses, 100,000. So you are required to calculate for amount of charity that Imam Ghazali will be given using accounting and auditing organization for Islamic financial institution method, and then that of International Financial Reporting Standard method as well. First of all, supposed to calculate for the cost of finance. And the cost of finance is different between the cost of the item or the property and then initial deposits made by the party. So from this particular person, the cost of the house, which is 500,000, and Imam Ghazali made initial deposit of 100,000. So 500,000 minus 100,000, which is 400,000. So our cost of finance is 400,000. And Imam Ghazali was required to pay annual markup of 8%. And then the markup is calculated on cost of financing. That's the difference between the cost of the house, and then initial investment, which is 400,000. So his annual markup will be 400,000. That's cost of finance plus the rate, which is 8%. And then this will give you 32,000. So every year, Imam Ghazali will be paid markup or interest of 32,000 to the bank. And Imam Ghazali was given 10 years to repay the amount. So it means that Imam Ghazali will pay his 32,000, that's the annual markup for continuously 10 years. So if you want to calculate for the total amount of markup that Imam Ghazali will be paid over the 10 years, you just multiply the annual markup by the number of years. So total markup over the 10 years, EB, that's the annual markup, which is 32,000, times the number of years, which is 10. And that's will give you 120,000. So after getting your annual markup and then total markup over the 10 years, we're supposed to calculate for annual cost of financing that Imam Ghazali will pay in as well. So the cost of financing, which is 400,000, Imam Ghazali after 10 years to repay that 400,000. So it means that every year Imam Ghazali will pay part of this 400,000. So we're able to calculate for the amount of cost of finance that Imam Ghazali will pay every year. We just multiply the cost of finance by 10 years. So annual cost of financing to be paid, that will be 400,000 divided by 10. That will give you 40,000. That will give you 40,000. So if you want to calculate for the annual installments that Imam Ghazali will pay, that will give the annual markup plus annual cost of finance. This will give you the annual installments amount that Imam Ghazali can pay through. So, annual installments to be paid. That will be the annual markup, which is 32,000 plus annual cost of finance to be paid, which is 40,000. And this will give you 72,000. So if you want to calculate for total amounts that Imam Ghazali will pay over the 10 years, that will be the annual installment times the mortgage, which is 10. That will be 720,000. So that is the another way for you to get this will be the cost of finance, which is 400,000, plus the total markup over the 10 years, which is 320. So total amount to be paid over the 10 years. And that will be the total markup over the 10 years, which is 320, plus the cost of financing, which is 1. And that will give you 720,000. And then another way to calculate for total amount to be paid over the 10 years, that will be the annual installment to be paid times the number of years. So we know that the annual installment to be paid is 720 seconds. Annual installment to be paid is 72,000, and then the number of years is 10. So 72,000 and 10. This will be 720,000. So we are done calculating, we are done with the necessary calculations. So we are now coming to answer the question itself. So the first requirement is calculate for the amount of charity that Imam Ghazali is supposed to give under accounting and audited organization for Islamic financial institutions. Okay, so from the question, Imam Ghazali was gifted an amount of 600,000 at the end of 4 years. So he was intended to redeem the Murabaha finance at the end of the 4th year. Although he was given 10 years to redeem or to repay the cost of finance, but since Chief Imam gifted the 600,000, he was having enough money to redeem the loan at the end of the 4th year. So he's supposed to calculate for the total amount that Imam Ghazali was owing the bank at the end of the 4th year. And then it was stated that the remaining markup that Imam Ghazali was supposed to pay, the bank gave him rebates, that's discount. So the bank canceled the interest that Imam Ghazali is supposed to pay between the 5th year and then to the 10th year. That's 6 years. 6 years. So 6 years interest was cancelled for Imam Ghazali. So if you want to calculate for the total amount that Imam Ghazali has been paid at the end of the 4th year, we just multiply the total amount of the installments or annual installment to be paid. That's 72,000 times the 4 years, because he paid 1st year, 2nd year, 3rd year, and then the 4th year. So total amounts that's Imam Ghazali are paid over the 4th year. So that will be the annual installment, which is 72,000 times the number of years, which is 4. So 72,000 times 4. This will give you 28800. So that's the total amount that Imam Ghazali has paid over the entire 4 years. And then we know that the total amount that Imam Ghazali is supposed to pay over the 10 years is 720,000. 720,000. And he has paid 288,000 at the end of the 4th year. So minus 288,000. And then we know that annually he's supposed to pay the markup for 32,000. And then the bank has cancelled the markup for the remaining 6 years from him. So if you want to calculate for the amount of markup or discount that the bank has given to Imam Ghazali, will be the markup, that's 32,000 times the 6 years. So 32,000 times 6. So 32,000 times 6, that will give you 192,000. That will give you 193,000. So the difference between the total amount that Imam Ghazali is supposed to pay over the 10 years, which is 720,000, and then the amount of money that he paid at the end of the 4th year, which is 288,000, and then the markup or the rebates or the discounts that the bank gave to him, that's the remaining interest from the 5th year to the 10th year, which is 6 years, times the 32,000 will give you 190,000. So the difference will give you the remaining amount that the Imam Ghazali is supposed to redeem at the end of the 4th year. So the difference between 720 and 388 and 192 would give you 240,000. So total amount that's supposed to redeem at the end of the 4th year is 240,000. So another way for calculating for this is we know that the cost of finance is 400,000. And then Imam Ghazali paid for 4 years. And then every year he was paying the cost of finance. Every year he's paying the cost of financing of 50,000. So the amount of cost of financing that Imam Ghazali was paid at the end of 4th year, 4 times 40,000. and this will give you 160,000. And this will give you 160,000. So the difference between the total cost of financing and then the cost of financing that Imam Ghazali paid at the end of the fourth year will give you the amount you will do. So the difference between 100,000 and then the 160,000 will also give you 240,000. So we can choose to use this approach, or you can choose to use this approach. Any of them will give you the same answer. So we are then calculating for the amount that Imam Ghazali is supposed to be paying at the end of the fourth year. So we are now coming to calculate the total amount of charity that Imam Ghazali will give us under accounting and auditing organization for Islamic financial institutions. So under AAOIFI, the amount of gigs that Imam Ghazali received was 600,000. And then the amount that Imam Ghazali is supposed to redeem or supposed to pay to the bank was 240,000. So the 600,000 minus 250,000. And then from the question, Imam Ghazali was intended to use 100,000 for his personal expenses, so he deducts the 100,000 from the gift as well. So minus 100,000, and that's the 600,000 minus. So 240 minus 240 minus 100,000 minus 340. So 340 minus 600 will give you 260,000. So amount of charity that will be given under accounting and auditing organization for Islamic financial institutions will be 260,000. That's the difference between the gift amount, which is 600,000, and then the amount that's supposed to be redeemed at the end of the fourth year, which is 240,000, minus the amount that Imam Ghazali was intended to use for his personal expenses, which is 100,000, and then that will give you 260,000. So let's look at the amount of charity that Imam Ghazali will be giving out under International Financial Reporting Standard as well. After that, we'll look at what causes the difference. Okay, so under International Financial Reporting Standard, over here you draw a table. You read a column for the years.
Yeah.
So you redeem. It was intended to redeem the loan at the end of fourth year. Yeah, first year, second year, third year, and then the fourth year. And you will create a column for cost of finance. Cost of finance, and then the interest, that's the markup, which is 8%. And also you create a column for amount due. Amount due. And then another column for installment pay. And then lastly, balance at the end of the year. So balance at the end. Okay. So cost of financing for the first year, or the cost of financing, is 400,000. That's the difference between cost of the house and then initial deposit. That's 400,000. And then the bank charge you annual markup of 8%. So you find 8% on the 400,000, and then this will give you 32,000. So amount D, that's the total amount that Imam Ghazali is owing the bank as at the first year. And then that will be the cost of financing plus the markup, that's the annual interest. So 32,000 plus 400,000, and then this will give you 432,000. After that, you record the installment payment. So from the calculation that to make earlier on, the annual installment payment is 72,000. So the balance at the end will be the difference between the amount due and then the installment payment. What this means is, at the end of the first year, Imam Ghazali is owing the bank 432,000, but he paid only 72,000. So the difference will be the amount that Imam Ghazali is owing the bank at the end of the first year. And then the difference between the two will give you 360,000. So at the end of the first year, Imam Ghazali is owing the bank 360,000. So this balance, that's the closing balance for the first year, will become open balance for the second year. So at the beginning of the second year, Imam Ghazali is owing the bank 360,000. So 360,000. And then for the second year too, Imam Ghazali is supposed to pay markup to the bank. But over here, you can pay the 8% on the amount that is owing as at the second year, but not the first year. So find the 8% on the 360,000, but not 400,000. So 8% on the 360,000 will give you 28,800. 28,800. So amount due, that's the total amount that Imam Ghazali is owing as at the second year. Be the 360,000 plus the markup, which is 28,800, and this will give you 388,800. 388,800. And then you also make an installment payment of 72,000. So 72,000. So the amount that is owing the bank at the end of the second year will be the amount due. That's the 388,800, and then the installment payment that's you made. So the difference between this and this will give you 316,800. 316,800. So this 316,800 was served as an open balance for the third year. 316,800. So at the beginning of the third year, Imam Ghazali is owing the bank 316,800. So Imam Ghazali will pay markup of 8% on 316,800, but not this. So 8% of 316,800 will give you the 25,344. 25344. So the total amount that Imam Ghazali will be owing the bank as at the third year will be the cost of finance owing as at the third year. That's 316,800 plus the markup, which is 25,344, and that will give you 342,144. 342,144. And then Imam Ghazali make an annual payment of 72,000. So minus 72,000. So the difference between this and then the annual installment payment of 72,000 will give you the amount of money that Imam Ghazali is going in the bank, and then that will be 270,144. So this amount will become open balance for the fourth year. So at the beginning of the fourth year, Imam Ghazali will be going in the bank 270,144. So for the fourth year to Imam Ghazali will be paying the markup of 8% on this amount, which is 270,144. And then 8% on this amount will give you 216,11.52. So total amount of money that Imam Ghazali will be owing the bank at the end of the fourth year will be the cost of financing at the beginning of the fourth year plus the markup of 216,11.52. So this practice will give you 291,755.52. So this is the total amount that Imam Ghazali is owing the bank and is only the bank as at the fourth year. And he made an annual installment payment of 72,000. Paid him. He make annual installment payment of 73,000. So the amount of money that Imam Ghazali is owing the bank will be the difference between this, will be the difference between the amount due as at the fourth year and then the installment payment that he made. And then that will do 219,755.5. So the amount of money that's supposed to be redeemed at the end of the fourth year will be the amount that Imam Ghazali is owing the bank at the end of fourth year, which is 219,755.52. So under International Financial Reporting Standards, if you want to calculate for the total amount of charity that Imam Ghazali is supposed to pay, will be the difference between the gate that he received. So you receive a gate of 600,000. You receive a gate of 600,000. And then amount of money that you're supposed to redeem at the end of the fourth year, which is this. So money is 219,755.85. And the answer from this amount, which is 600,000, Imam Ghazali was intended to use 100,000 for his personal expenses. So you without the 100,000 as well. So minus 100,000. Minus 100,000. So the difference between 600,000 and this amount and then this will give you a total figure of 280,000. 244,848. So under International Financial Reporting Standard, this is the amount of charity that Imam Ghazali will be giving out. And under the Accounting and Auditing Organization for Islamic financial institutions, Imam Ghazali will be giving out charity of 260,000. So the last requirement is we should explain what caused the difference between the two methods. Because under International Financial Reporting Standards, it's giving out charity of 280,000, 244.48. And then under under Accounting and Auditing Organization for Islamic Financial Institutions, it's giving out a charity of 260,000. What caused the difference between these two methods is the concept of time value of money. So you can see that under International Financial Reporting Standards, every year the interest, or that's the markup of 8%, is calculated on the amount or the actual amount that Imam Ghazali is owing in the bank. But under Accounting and Auditing Organization for Islamic Financial Institutions, the interest was constant. It was calculated on the on the cost of financing, and then that was 32,000. So every year, Imam Ghazali was paying a constant interest of 32,000. But under International Financial Reporting Standard, interest keep on changing from year to year, all because of the interest was charged on the amount that is going at the beginning of the year. So what caused the difference is effective profit concepts. Effective profit concepts, which depends on the concept of time value of money. So time value of money simply means that a cedi today worth more than a cedi tomorrow. Because if you have 1 Ghana cedi today, we can use it to do investments and then you earn interest on the 1 Ghana cedi. But if we're expecting a 1 Ghana cedi tomorrow, maybe there might be inflation. Whenever there is an inflation, it reduces the purchasing power of money. So it means that what 1 Ghana cedi can buy today cannot buy tomorrow. That's the principle behind time value of money. So what forces the free these two methods are effective profit concepts, which depends on the concept of time value of money, which is that a cedi today worth more than a cedi tomorrow. So on this note, I've come to the end of today's session. In the next session, we'll continue by looking at how to use classified balance sheet method in the posting of balance sheet statements. In the next session.